The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Dominic Frisby, keeping you up to date with expert opinion on precious metals and the markets.
Hello and welcome to the Gold Money Podcast, hosted in association with Frisby's Bulls and Bears, with me, Dominic Frisby. Now, I'm sitting in London in the garden of the Troubadour pub/restaurant in Earl's Court in West London, and sitting opposite me is the trader Michael Hampton, trader and author Michael Hampton, I should say. Mike is based in Hong Kong, but he's visiting London, and it's great to catch up with you, Mike. Now, in the last programme I recorded with you, we talked about your view on markets, but in this programme we're going to take a rather more philosophical angle, and we want to talk about currencies. I think we are both agreed that some kind of currency crisis is coming. It's something that I talk about in my book. Quite how that crisis is going to manifest itself, nobody's sure. It could be a horrendous deflationary bust. It could be a hyperinflationary crack-up boom. Nobody really knows. But you can't go on debasing money in the way that it's being debased. These are some of the issues that I address in my book, so we're going to talk a little bit about my book as well. So why don't I hand over to you, Mike, and you kick things off, and then we'll have a conversation going from there.
Yeah, I think actually this is a very interesting time to be exploring the idea of what makes a good currency. What we've had in the past, up until now, served us pretty well for certain years. It's probably not going to serve us nearly so well in the future, and it's beginning to fray at the edges a bit. So I think the fact that you're writing a book which looks at this is very timely. And I'm very curious. The book hasn't come out yet, and so I haven't read it. I've seen a clip on YouTube which has some very interesting hints about what's in the book. So I thought it would be interesting to have a two-way conversation, to hear a little bit more about the ideas that are going to come into the book, and also talk about the larger topic of what makes a good currency.
Well, one of the big themes of my book is that I can actually find an argument that many of the problems that we have in the world, particularly this skewed distribution of wealth, where we have this incredibly rich 1%, and I posted a statistic the other day that the richest 400 people in the world have assets equivalent to the poorest 140 million. And I thought that was actually a statistic from Jeremy Grantham, the fund manager. And somebody picked up on that and said, no, they don't. It's much worse than that, because there are X million people who have negative actual worth. And I think of students with a load of debt and no assets, people with huge mortgages on their house, and the distribution of wealth is a major problem. To me, that is entirely a consequence of our system of money, and wealth concentrates around those that have the monopoly on the money, those that have the power to issue the money, and those furthest from the money's issuance are the ones who suffer the most. And there's this kind of cycle that compounds over time, and which is why that 1% get richer and richer and richer, and the rest of us fall further and further behind.
Well, we certainly saw that in the last few years, when after the crisis of 2008, the first reaction of the political authorities was to look after the banks. And the banks got bailouts, and the banks got loads of money from the Fed and from the Treasury. And the individuals who had the debt problems themselves, they got very little help at all. So perhaps that was the 1% looking after the 1%, which is part of the problem.
Another problem that is entirely, in my view, a consequence of our system of money is the fact that governments have got so big, they've got very invasive. You know, there's a kind of slightly religious belief amongst certain people on the left wing that, everything governments do is good. And I happen to think, for example, that if governments didn't have this monopoly that they have on money, not only could they have never grown to such size, but things like World War I could never have happened. The Vietnam War could not have happened. I mean, they would have happened, but not to the same extent, because governments didn't have the gold to pay for them, and they only paid for them by taking their countries off.
I'm trying to remember what that famous quote is about how governments will I think it was Margaret Thatcher that said it, is that governments will go on spending money until...
the problem with socialism is that sooner or later you run out of other people's money.
Sorry, that's exactly right.
I think I paraphrased it a bit, but anyway.
Yeah, that's the quote I was trying to remember. And I suppose the problem with that is that if we see how the governments now control the amount of money that's in circulation, and they basically control who gets it. So two types of people who are at opposite ends of the spectrum tend to get it. The 1% and the bankers tend to get it on one end. On the other end, a lot of money tends to go to people who haven't got anything, who then are using that money to pay their bills, and they're using that money to live. And basically that money is bribing people to vote for the socialist governments.
Well, in my book, I do a case study on the city of Glasgow. And the city of Glasgow's history is just amazing. Did you know it was regarded as the second city of the British Empire? At the turn of the century, in 1900, it was the fourth largest city in Europe. The wealth in Glasgow, it was wealthier in relative terms than Singapore or Hong Kong is today. And the reason that Glasgow enjoyed such wealth is, well, there are all sorts of reasons, but it began in the 17th century, I suppose, because if you caught the trade winds, the first place you arrived in the UK was Glasgow, and it had a 2-week advantage over the rest of the UK, and it used that first mover advantage to become a trading hub. And yet, when locomotion arrived, you know, you would have thought Glasgow would be put out of business, but it wasn't. It remodeled itself, it became a shipbuilding centre, and, you know, in 1900, I think something like 25% of all locomotive ships in the world were built in Glasgow. I mean, that is a huge proportion. And it's gone from, basically from 1911, but really from 1914 and the First World War, from stupendous wealth to just being the kind of the capital of everything that's wrong with the welfare state. It's like, it's got the highest I mean, there are some parts of Glasgow, there's some regions of Glasgow, some districts I should say, where something like 65% of kids grow up in families where nobody in the household works. It's the obesity capital of the UK, it's the murder capital of the UK, it has the lowest life expectancy in the UK, it's the unhealthiest part of the UK, it's the crime capital of the UK. You know, all these terrible statistics. And in my book I actually put forward the argument that, I mean, it sounds extremely tenuous, but hopefully when you read each argument in each stage, you realise that it's actually, I put it down to being, it's a consequence of the welfare state not actually helping people as it's intended to do, but actually harms them. So even though the government is giving people money, what's happened is when people are being given money, the kind of helpless demographic expands, and the helpful, if you like, demographic contracts because they're having money taken away from them. And so you kind of...
Well, this is a problem that one of the two candidates in the U.S. has fingered, which is Mitt Romney has talked about this a little bit in a very clumsy way, unfortunately. We're saying that 47% of the American voters might be inclined to vote for his opponent because they're receiving a lot of money from the state.
Yeah.
And unfortunately, it seems to be easier for some politicians and maybe some parties to rely on the fact that people who are net recipients of wealth are inclined to vote for the party that's happiest to give them more of what they haven't earned.
Merriam Somerset Webb described the lead up to elections as a welfare arms race.
Yeah. Well, that's a good way to look at it, is the more extravagant promises a party can make, the more likely it is to get votes from certain parts of the problem is that I suppose an economy can afford that to a point, but when a majority of people are relying on the state to give them what they've got, then the state is probably in a very unhealthy situation economically.
The big theme of my book is that it's counterintuitive. You know, people think if you're right-wing, you can't be socially conscious, but I actually regard myself as extremely socially conscious. But one of the conclusions that I've come to is that the best way for a government to help people is not to.
Yeah.
I mean, you know, for example, the National Health Service, given, you know, it's sacrosanct in the UK. You cannot criticise the NHS, but if you look at the cost of the service it delivers, it's just way too expensive for what it is. And, healthcare has become more expensive, and it's even worse in the States. The cost of everything else has fallen. Medicine has improved in quality. We are way more productive. We have more medicines at hand. We have greater expertise. The cost of healthcare should have fallen. And I honestly believe in a genuinely free market it would have fallen. But in fact, the cost of healthcare is just stratospheric, and it's almost going to topple the government if you look at the numbers. If they didn't have the power to run up deficits, it would topple the government.
Well, I think this is one of the big challenges of our time, is to wean people away from their dependence on the state. And it isn't just the people who have less money and are relying on the state for benefits, but it's also the other end. A lot of the people who are wealthy rely on the states as a customer or to protect their businesses. And the real loser in that sort of dumbbell model where the poor benefit and the wealthy benefit is the middle class. And I think that this has got to be the time when politicians have got to start refocusing on the middle class and giving them a better chance to improve themselves and thereby improve the overall wealth of the state, because it's the fate of the middle class that really matters, isn't it?
Now, it absolutely is. And now, in my opinion, you can't just disband the NHS or whatever government initiative it is. But one thing you can do is take away their monopoly on money. And so a big solution to this mess that governments have created is my theory of having independent money. Now,
can you explain what that is a bit more?
Well, at the moment we have this. We must use government money as we must pay taxes in government money, and in the States you actually have to effect all transactions in US dollars. Here you can actually use other currencies, but you have to translate that into pounds and pay the appropriate taxes. But I had to transfer some money to Brazil because I went on holiday there, and it involved, I don't quite know how that is, but it involved 3 different banks, and it involved some money having to go to New York. It was just unnecessary, and every time some money went, a bank took $50 or something, and by the time the money had reached where I had to go in Brazil, it was just a headache, and a significant a bit of that money had been sliced off the sides. In the modern world, it needn't have been that expensive to send some money from one country to another.
Well, part of that's the lack of competition amongst the banks. I mean, I read something interesting in the paper today.
But it's also to do with national currencies.
Yeah, I want to come back to that, but I just wanted to point out that this morning in the paper, there was a story that Virgin might be buying, I think it's 167 branches of RBS that they're being forced to sell, because a Spanish bank, Santander, decided not to buy those, and now Virgin wants to buy it. So let me just be clear here. Are you talking about having more competition in the banking sector, or are you talking about something else?
Well, I'm talking about both. I'm talking about, I like the idea of metal, gold, silver, copper, nickel, being stored in vaults all around the globe, and it's basically the gold money model, and then ownership of that metal changes hands. When you click pay on your app or on your credit card or whatever means of payment you're using. Now, if I'd needed to buy what I needed to buy in Brazil by that method, there would have been no forex, how many kilos of copper for that do you need? 10 kilos of copper, boom, it's done. And obviously it's more effective with gold and silver because they're much smaller, so the storage costs are lower. But that's some kind of, global metallic money. The other beauty of global metallic money is hard for people to print. So,
well, it's very interesting because
that would be one independent currency. I have never bought a Bitcoin. It's one of those things I keep meaning to do so, just on principle, really. But I've just never quite got round to it. But Bitcoin, I don't understand the algorithm that whereby Bitcoin is created. But I'm assured that it's legitimate. So, Bitcoin is another independent currency.
But I think that whatever currency you have, you need some backing for it, because partly it's a question of confidence.
Yeah.
And the other is if the currency starts to get wobbly, as we're seeing in various currencies now, there's a way of taking that wobbly currency and transforming it into something else, whatever's backing it. So if you have gold backing, then you could convert it into gold, and you could take it to another country, which is less wobbly, and spend it there. So you probably need backing for the currency of the future.
Yeah.
So you're talking about backing it with something different?
Well, I don't think a gold standard, gold standard is kind of partially independent money because governments tie their money to gold, which is independent. Mm-hmm. But, gold standards always get abused. And then when it suits a government, they just come off the gold standard. So it's not purely independent. But so I'm less talking about, I'm talking about one form of independent money is metal, another form is Bitcoin. If some institution, if we follow Hayek's book on competing currencies, the denationalisation of money, any old institution can issue any old paper. But if the marketplace decides that they're happy to use that as money...
Do you mean like Ron Paul's idea of competing currencies?
Yeah, I suppose I do. I'm a big believer in the power of the free market, and the free market, comes up with natural, organic solutions to things rather than having it imposed on you. And if you suddenly, had some kind of monetary turmoil and it was left to the free market to sort it out, I imagine that the first port of call would be to start using metal as money. But once you've settled into some kind of, once you've settled, I imagine that, more elaborate forms of money would start being offered into the marketplace and some of them being taken up. Why don't you outline Ron Paul's current competing currencies idea?
Well, at its most basic level, he'd like to allow people to use not only dollars in settling transactions in commerce in the U.S., but also gold and even other currencies as well. And the idea is that for some reason people don't want to store their wealth in dollars, they can store it in gold and use that currency for their businesses and for their economic transactions.
There are two problems. Firstly, there's the logistics of, say you run a shop and people are offering all sorts of different currencies. You might think it'd be a nightmare, but and I suppose it would if you ran a news agent or something where you're turning over tiny transactions. But I was recently in Istanbul, and I walked through the Grand Bazaar there, and the people there will take dollars, euros, Turkish lira, they'll take pounds, they'll take Russian rubles, they'll take anything as long as it means there's a trade for them. And the services of Dominic Frisby are available for hire as a voiceover comedian, podcast presenter, writer. They're available in pretty much any currency you care to mention.
Can I pay you in renminbi, Chinese renminbi?
Yeah, I don't have one of the problems with paying me in renminbi is that I don't have any plans to go to China anytime soon, and banks in the UK make it really difficult to open current accounts in foreign currencies. You can open a US dollar account, but you can't have a debit card or a Visa card, and you kind of think, well, why do you make it so difficult? Well, surely, in this global marketplace, we should all have US dollar accounts with Visa cards on them, and so,
Well, I wonder if you had competing currencies, it would be a little bit like competing stocks, where at any particular time, one stock, Google, for example, might be in favor and going up a lot, and then the year after that or 2 years after that, it might be Apple, another currency going up. Yeah. So people might shift back and forth from one competing currency to another.
I guess they would, and I suppose they already do to an extent with national currencies. But the point is, we need currencies that are international and non-national, if that makes sense. The big issue comes with competing currencies is in tax, because government wants payment in its national currency. Now, if its national currency is totally devalued by the presence of other currencies, then how does it levy tax?
Well, that's true, and I can see that as a problem. But if the currency loses value, then the tax collections in that currency are going to be losing value as well. So, I find it quite interesting in China. We have a situation where the government has suggested to people to buy gold and silver because they want their citizens to preserve their wealth better than in storing it in other places. So maybe there would be a benefit to the state in a way where their citizens won't be impoverished by a currency that suddenly loses value, because some of those citizens will have kept their wealth in gold. So maybe that's actually a benefit to the competing currency, the fact that people don't store their wealth in a single currency, the pound or the euro or whatever.
Yeah, I mean, I've got mixed feelings about the Chinese government, because on the one hand you hear pronouncements like that, they encourage their citizens to own gold, which sounds absolutely sensible, and you wonder why every government doesn't encourage it, although what business is it of a government to start telling people what to own? But then you see some of the crazy planning that's gone on, you know, the empty cities, and the malinvestment, and also some of the horrendous corruption there is at kind of almost every level in China.
Well, in fact, I think the problem in China is that although people do store wealth in gold and silver, most people in China actually store wealth in property. So if they have a big chunk of money,
as they do in the UK,
yeah, they'll go and buy property. And one of the reasons the government was trying to get people to use gold and silver was to get them to put a bit less of their wealth into property, because prices have become really very high, and it's become a dangerous thing. And perhaps in the UK as well, especially in London, there's too much of the country's wealth in China, and maybe also in the UK, is stored in property.
Yeah,
it can become dangerous. So I think this probably raises the question of backing, because if you're talking about competing currencies, gold-linked currencies are backed by gold, but what else might you back your currency with if you're going to have competing currencies?
Well, you're asking me, and the answer is I don't know, but I think you've got an idea.
One idea that's been kicked around a little bit, but not fully developed, is the idea of backing up a currency with something other than a dead asset like gold. I mean, gold has lots of virtues, which you've defined quite well, but one sort of non-virtue of gold is the fact that money stored in gold is fairly sterile, because gold itself doesn't do anything but retain its form, which is one of its virtues, but also it doesn't add to the productive wealth of the country. But if you store wealth in a business, or if you store wealth in a income-producing property, in some respects, you're storing wealth in a productive place where it can help the economy grow and maintain its stability. So one idea that I've seen kicked around, and it needs a lot more development than I can possibly give to it right now, would be to actually store wealth in equities. So you might have, for example, a currency whose value is linked to the S&P 500 or the FTSE 1000, and then people who are putting money into that asset effectively are putting more money into the stock market, where it can help generate wealth for the country.
Okay, I mean, I like that idea. I think, like you say, it needs a lot of development. So it's probably, you know, the first phase, if you like, of the new currency era might be metal, and what you're describing might come in further down the road, perhaps as the economy is expanding a little bit more. One of the problems with that is it does seem to encourage it encourages investment, but it might also encourage malinvestment and excess speculation.
Certainly there's a risk of that. And, you know, when money floods into stocks or floods into property, you do get malinvestment. So that would be a very important issue that the makers of a new currency would need to consider. And I don't know exactly where your book's going to be on these solutions, whether it's going to propose solutions, evaluate them, or maybe kick off the debate. But I think a debate about the issue of what makes a good currency is very timely and very important. And that's why I'm really glad we had this conversation.
Yeah. Well, yeah, it's been great talking to you. And just to kind of answer your question, is I've written the first draft of the book, and I'm now in the rewriting phase. But the main theme of the first draft of the book is more about the wide range of damage that the existing form of money has done, and how that damage has manifested itself in all sorts of peculiar and unexpected ways. And my main kind of scope, if you like, was to highlight that to people and show it to people. So alternative explanations for existing problems. But I think it's important to have a positive message to say. And I must confess, I'm a little bit, I've taken the approach that, well, leave it to the free market to sort it out, which is, it's an easy argument to say. You hear people touting it all the time, and it's easy for me to say that.
I'm really looking forward to reading your book and learning, perhaps more detail than I thought about what the problems are with the currency, and I mean, we can see them every day, but the deeper reasons why we have problems with our present currency system. And then maybe,
I even link our current system of money, I link it to wars, obviously, I link it to the welfare state, I link it to the malfunctioning health service, I even link it to the rape of the environment. and the
That's very interesting.
Well, I'm because our system of money creates excess speculation and malinvestment, which leads to the overuse of resources. And I don't think we do live in harmony with our environment anymore, and we need to. And I'm not necessarily a believer in global warming or anything like that, but when I see swathes of forest being cut down or beautiful rivers being polluted, it makes me want to despair.
Well, that's great. I mean, I think that, if we do, as a society and as a global society, move on and start thinking about how we might redesign our currency, we need to understand very clearly what the problems are with our existing currency. And that's what your book apparently is going to do, is to give us a pretty good sense of what those problems are.
Yeah. Well, Mike, we're going to wrap this up. It's been a pleasure talking to you, and thanks for kind of talking to me and asking me some questions. And if any of you are interested in the book, you can find out more on the website Unbound. I'm publishing it by crowdfunding, and I think it's pretty much already funded, but you can still buy the advanced copies. I'm at 77% as we speak. But yeah, the website is unbound.co.uk, and the book's called Life After the State.
And I'd recommend that people have a look at your very interesting video, which sort of introduces the book. Can you tell us how to find that?
Well, that's on YouTube. Again, just look on the page, look on the Unbound link, and it's all on there. All right. Mike Hampton, thank you very much.
Pleasure, Dom.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.